Hey everybody, welcome to TradeScope. My name is Luis Garcia. I'm a part-time trader, and this is my weekly recap where I talk about all the stocks that I've been trading lately. Before I get started, I have to let you know that this video is for educational purposes only and is not meant to be taken as financial advice. With that, I'll get started. My only trade of the week happened on Friday afternoon. It was AREB, American Rebel Holdings. Very low float stock, very volatile, lots of volume on Friday, and really the whole week. So this thing's been taking off for various news catalysts. I'm just reading through them right now to refresh my memory, but basically it's a clothing company, I believe it is. They're potentially getting new investors and some advertising, but basically it had a news catalyst, it had high volume, and it had a low float, so this was a perfect candidate for a momentum trade. I have been playing very defensively lately due to market conditions and my longer term positions being a little bit overweight. So I didn't really take a big trade on this. I'm basically break even on it, which is a little disappointing because there was a lot of movement here to take advantage of. So I bought this right around 3 o'clock after I saw it bounce off of the VWAP here. For those of you who don't know, this is the volume weighted average price, typically used as a bullish or bearish indicator. If the price action is above the VWAP, the price action is considered bullish, and if it's below, it's considered bearish. So I've been watching this. It's been on the scanners all day, halted earlier in the day, and it kind of bounced off of the VWAP. I looked at it around 3, and I saw it get halted. It got halted right around here. So that's when I decided to get in. I only got in with, I think, like 200 shares, something like that. And I got out pretty quick. I got out with like a 20-cent gain. So I think my total gain on this stock was like $40, which is disappointing because, as you can see, the rest of the day, it kind of proceeded to go higher, all the way up to $22. So that could have been a cool $2,000 I could have made had I just held it till the end of the day and into after hours. But again, the longer you hold a stock, the more exposure you have to risk inherently. So that's something to keep in mind, especially on these very whippy stocks and these very volatile stocks. Something that I'm always focused on is the larger context. So we've been in a very volatile market as far as small cap, low float stocks go. We've also been in a market correction. We're nearing a market correction due to the Magnificent Seven stocks plummeting over the past 3 months, almost 20%. So all of these in the larger context, I'm always keeping in mind, and not just because of how those stocks may affect the stocks that I'm trading, because as you can see, the market didn't really affect this particular stock so much, but it does affect my overall portfolio, and I do have to be aware of the context of the larger market in which I'm trading. So I have been more defensive. If you've been following me, you know that, because I've been taking no trade weeks, and I'm hoping to come off of that a little bit. Now that the tariffs have been announced, I think the market is going to have time to kind of react in real time to the rest of the world's reactions to the tariffs, and we're going to see a lot of good volatility. So I'm hoping to lighten my load on some of my longer term holdings, some of my swing trades like Tesla, SYM, and we'll get into those in a minute. But that's kind of my strategy going into April, because I did see a slump in profits last month. I only made about $600, my slowest month of the year so far. Overall, the first quarter ended well, so I'm happy about that. But I want to be a little bit more aggressive going into April and May. before the summer comes, because typically summers can be slow. So with that said, that was my trade on AREB. I think it's a good indication of what things have been doing in the low cap, in the small cap, low float market. And with that, I just have to review kind of my strategy right now. So let's take a look at Tesla. This thing has been getting beaten and bloodied since I first bought a stake in it. So I took a small stake in it back here at 300, and on its most recent dip on Friday, I actually bought another 10 shares. So now my current cost basis is right at about 280. So I'm looking for really just a bounce back to that. And I just want to get out of it, really, because I want to free up that capital so I can trade some momentum stocks instead. Something to keep in mind, this stock, along with a lot of the other Magnificent Seven stocks, has been slipping since about December, and that kind of coincides with, if you remember the market news at that time, it kind of coincides with the DeepSeek news out of China. China, of course, announcing their kind of progress on AI and large language models and processing power and all that good stuff. And it kind of spooked the market a little bit and questioned American company dominance in the sector. So I think that has kind of overall spooked the tech sector in general, and you can see that in the sell-off since that time frame. I do think it's about time for that reversal, but we have to wait and see. There's too many moving parts right now. Things can definitely go lower. We're already below the 200 on this particular name. But yeah, I'd really like to just see a bounce back up to the 200, maybe make a little bit of profit and then get out of this thing. As you can see from this trend line I drew, it's kind of got a little bit of room to bounce back against that trend line. Will it break through it? If it does, I would definitely be a seller, because as you can see, so many places where it failed that trend line test, right there, right there, right there, right there, and most recently right there. So all those places, that big trend line is definitely going to hold. You have to trust the trend. The trend is your friend. And that's kind of one of my long-term holdings. Another long-term holding that I wanted to take a look at, that I've been thinking about getting out of recently, has been this one. As you can see, it's fallen out of my window of trade action that I've been tracking, and I'm going to be watching it to see it close out as a hammer candle, the daily, to see if it bounces back up at all. And depending on what it looks like, I might either depending on how my portfolio looks at the time and how everything else is going, I might either cut back a little bit or add a little bit to lessen my cost basis and ride the robotic train, because this is a robotic stock. So I'd like to see it, again, a little bit of profit would be great. If it's a small loss, it's okay, because I've made good profits so far this year, but I have to make sure that a lot of these longer term holds, any losses that I'm incurring from them don't begin to cut into my profits from the year. So these are the things I'm really paying attention to going into April, and hopefully that strategy will pay off for me, but we have to watch and see what happens. So yeah, that's pretty much my spiel for this week. Like I said, only one name traded, AREB. What are you guys trading? Let me know down in the comments. Let me know what you think about the overall market, some of the crazy volatility we've been seeing, a lot of the sell-offs due to tariff news and other tech slowdown news. I'd love to hear some opinions down in the comments. And thank you all for subscribing, who are listening. And if you haven't yet and you like this video, please don't forget to like, share, and subscribe. And I'll talk to you guys next week.